If you're about to buy a house or refinance your mortgage, or you're looking to buy a condo or a townhouse, this video is for you. Hi everyone, welcome to another episode of 3 Minute Money. I'm Pat Zumbush, your YouTube CFP professional. In today's video, I will help you buy a home you can afford using a tried and true method that's worked for years, and I've personally used it to help thousands of clients get into a house that they can afford. The method I'll explain in this video even works despite the increasing housing market over the last 30 years. Before jumping further into today's video, for anyone new here, be sure to subscribe to my channel. And just so you know, any ad revenue I receive here on YouTube is donated to financial literacy charities throughout America. Help spread the word by sharing my channel with your family and your friends. Spoiler alert, the mortgage you are about to be approved for is likely not what you can afford. For many home buyers, this is how the process generally starts. The individual or couple visits their local bank or goes to their website. The loan officer or online application asks about their income and debt, runs their credit report and crunches the numbers, and boom, the individual or couple is approved for a huge mortgage. And they dance happily and imagine the big house that they will buy. Unfortunately, many people don't understand the difference between how much mortgage they are approved for and how much they can afford. How much mortgage someone qualifies for is based on their credit, down payment amount, and ability to pay, and mortgage based on income. We all have financial commitments beyond what our credit report reflects, like medical expenses,
Preach yourself.
child care,
Preach yourself.
or we need money for our hobbies,
Preach yourself.
and family vacations.
Preach yourself.
Aside from those living expenses, the lender isn't always considering the additional cost of owning a home, like property taxes, homeowners insurance, and maintenance.
I would like you to crunch those numbers again.
The affordability of a mortgage must factor in all these things I've mentioned, and the amount of mortgage you are approved for will never do that, which is why you almost always will be approved for a huge mortgage. The first step is knowing the difference between the mortgage amount you are approved for and what you can afford. Let's calculate the amount of a mortgage that you can afford and still have a great life. The most well-known mortgage payment rule is the 28% rule, which states that you should not spend more than 28% of your monthly gross income on the combination of 4 things: your mortgage, including the principal and interest, property taxes, and insurance. Usually your property taxes and insurance are billed semi-annually, so you need to divide these numbers by 6 to get the monthly cost. If you would purchase a home with a homeowners association, you will also include the HOA fee in the calculation. Also, if you put less down than 20%, you will likely have to pay this expensive thing called private mortgage insurance, or PMI, and you need to include that in the calculation.
Just crunch them, please.
Here's a quick example of putting this rule into practice. Suppose your gross annual income is $120,000. Your monthly gross is $10,000, and the most you should spend on housing is $10,000 times 28%, which is $2,800. As I mentioned earlier in the video, I've personally used the 28% rule myself with thousands of clients. It just works and makes sense. If you spend more than 28%, the truth is you're squeezing out enjoyment or other stability in other areas of your life. The total amount you have to spend is 100% of your monthly gross income, and the home expenses are now taking roughly 30% of it. If you enjoyed this video and thought it was valuable for teaching you more about personal finance, just hit the like button and please share the video with your friends and family. If you want more money tips, subscribe to the channel for new videos weekly. Thank you for letting me help you do wise things with your money. Zumbush out.